Hi, this is Zak Mir with the Bulletin Board Heroes here at Vox Markets for Thursday, the 15th of July. Starting off with Capital, where we've got this rising trend channel that's been in place since the beginning of last year. Nice gap through and above the 50-day moving average around 77 pence, while we're above that on an end-of-day close, looking forward to as high as £1.10 perhaps over the next couple of months, maybe 6 to 8 weeks, mid-September, something like that. If you're cautious on the shares, obviously you could wait for a clearance of last month's resistance at 87 pence, but the gap higher today, especially given the current market conditions, and that's and especially with the previous gaps we've had unfilled earlier in the year, suggests that this stock has decent momentum behind it, which is obviously something rather rare at the moment. Darktrace is next. I think I covered it a while back, and it's making good progress. Not normally the sort of stock that appears here, but we had that initial breakout there from the mid-May peak at 448, and that's been held ever since. In fact, we had support coming in there around that level at the beginning of the month. Current situation is that we're in a rising trend channel from back in May, and the top of the channel heading towards £8. Upside valid while we hold above the previous July peak at £5.68, so above that, looking for £8 perhaps by the end of next month. Moving along to a stock which has been rather volatile in the past, but given the lack of movement in the market as a whole at the moment, Eurasia is a bit of a hero. Here we've seen extended consolidation with the shares either side of the 20 pence level over the course of June and earlier this month. Uptrend line there from July, which looks like it's the floor of a rising trend channel, with the top of the channel heading towards 47 or 48 pence, maybe a 2 to 3 month target there. But at least in the near term, while we're above 20, looking for that resistance line there around 26 for the shares, which I think would be quite a result in current market conditions. If you're cautious on the shares, maybe to wait for an end-of-day close or a weekly close above the 50-day moving average around 23 pence before judging that the recent consolidation has finally run its course. Moving along to a stock which doesn't make too many appearances here, but is back given the dearth of other contenders at the moment. Ubiquity, here we've had a decent recovery for the shares since February, and looks like it's ready for another leg higher, gap higher above the 50-day moving average and through the previous resistance area, or at the previous resistance area. That suggests that we could see a little bit more on the upside, perhaps up towards the top of that rising or a rising trend channel, which I'm attempting to draw at the moment. Floor of the channel currently around the 50 pence level, so above 50, looking for 80 perhaps by the end of September. And the big plus would be if we don't fill the gap higher that we've had today. On to another stock, which again has been promoted, given that there aren't any sort of micro caps, not that many micro caps to look at the moment. Here I did cover the shares quite recently, but we had a gap higher through resistance. That's basically been held so far, the old peak around the 111 level, and so the longer we stay above that, with a weekly close above that, the greater the chance of a move towards £1.50 over the next 6 to 8 weeks. At this stage, anybody back below the gap and the floor of the gap around 101 would really delay the upside scenario. Kromek is the next stock to have a technical investigation. Here it's quite interesting that we've broken recent resistance, June and early July resistance around 17 pence, and end of day or end of week close above that could take the shares up to that resistance line there from February, currently promising us a target as high as 23 pence by the end of next month. We move along to a stock which has been rather soft since it came to market, although there were quite high hopes at one point, but maybe that it's finally time for a turnaround at Mast. We've got to break out of this falling wedge which has been in place since April. The level in question around 11, well, I suppose that's 10 and 3/4 pence, so end of day or end of week close above that, we could be back towards the 13, 14 pence area, which was resistance on the way down. That's been the resistance since early May for Mast Energy, or Mast Energy Developments, in fact. Gone to stock which has just raised money, and interesting to see how stock behaves after that kind of event. We've got Nanoko with a well, there was a line of support, well, it is a line of support from back in January around the 18, 19 pence level. The longer we can stay above recent support around 19 pence, the greater the chance of a move back towards perhaps 25 or 26 pence by the end of next month, given the way that we've sort of double bottomed and bear trap below 20 pence, the March intraday support for the shares. As I said, pretty thin out there, so looking at some of the favourites as well. Premier African, a favourite for some anyway, bouncing off this line of support from February. That's at yesterday's low, around the 0.18 level. The longer we can stay above that and get a weekly close above that, the greater the chance of a retest of last month's resistance through a quarter of a penny, 0.25 pence. And we could see that by the end of next month. Moving along to a happier situation, the small oilers doing rather well at the moment. And here we got Pantheon. Looks quite encouraging, probably more encouraging than I portrayed so far. This could be a mid-move consolidation. And so the minimum target here up to 60 pence. But if it is actually just a mid-move, then we could see a move back up towards 75 pence or so at the top of a rising trend channel from back in May. So let's see if the shares can deliver on that promise. Stop loss back below the recent support, which is just below just at the 47 pence level at the moment. So above 47, up to 60 initially, and then perhaps up to 75 sometime in September for Pantheon. Another stock which has been on the back foot but may be ready for a revival is Sabien Technology. Here we've got possibility of a falling wedge breakout. Obviously, we want to see, I suppose, a break of that resistance line there from March, and also the 50-day moving average at 23.5 pence. If we can get that on a weekly close basis, then it may be time for another go at the upside, perhaps up to the upper 20s for Sabien sometime by the end of the summer. That's it for me today. More updates tomorrow.